Hi everybody, this is Lara with your end of the week video analysis for the gold spot market for the trading week ending Friday the 22nd of June. I have a new wave count for gold which expects it's in a huge triangle still. Next week we may see the start of a little bounce up to about 1279, which may last a very few days, and after that overall I'll be expecting a continuation of downward movement over the next few weeks. The target is now 1216 to 1211. When that's done, a final upward swing to complete the triangle. The zigzag wave count still remains valid, but it will be discarded now if price can print a full daily candlestick below the black 2-4 trend line on that zigzag daily chart. Elliott wave counts first, classic analysis last. For gold, I have 4 wave counts at the weekly chart level. Looking at, well, I actually have more, and I'm linking back to these wave counts at the beginning of every text article and for Lara's weekly at the beginning of your weekly reports. I'm looking at 4 different structures possible for cycle wave B. I'm also looking at the possibility that we have a low in place here and that this is the start of a new bull market rather than a B wave. So I'm considering all possibilities. I'm going to publish 2 on a daily basis. This is for the short to mid-term, more bearish wave count, and the other wave count is more bullish. So I'm going to publish 1 bearish and 1 bullish, and I'm going to pick the 2 wave counts that have the best fit and the best look in terms of Elliott wave, and this one is presented first because it has now more support from classic technical analysis. I'm looking at 4 different possibilities for cycle wave B: a triangle, a flat, a combination, and a zigzag. So I'm covering all the major possibilities. This wave count has no problems in terms of rare structures. All the subdivisions look right. It has a really good fit. If cycle wave B is a triangle, then it may be the most common type of triangle, a regular contracting triangle, with a single zigzag for A, a single zigzag for B. We may have a double zigzag now completed for C. I've gone back over the daily chart and had a look at this structure, and it will fit as a zigzag X second zigzag. It fits as a double zigzag. So I've resolved the problem where I was previously trying to see it as a very rare triple. It does actually have a pretty good fit as a double. My problem was in here, and I've tried to resolve trying to see if this is a 5-wave structure, and yes, it will fit. The most common triangle subwave to be a more complicated multiple is wave C, and so this not only has a good fit now, but it follows the most common pattern for a triangle. And so because only one triangle subwave may be a more complicated multiple, we'll be looking for a simple ABC structure for primary wave D down, and then a simple ABC structure up for primary wave E, both of those most likely to be zigzags. One of the triangle subwaves doesn't have to be a zigzag or a zigzag multiple. One of a triangle subwave can be a different kind of corrective structure like a flat correction, but almost always all of the triangle subwaves are zigzag or zigzag multiples, with only one being able to be a multiple, and so we'll be most likely, by quite a wide margin, looking for a zigzag down for primary D and then a zigzag up for primary wave E. At this stage for this triangle, the AC trend line does not have a very strong slope. In order for the triangle trend lines to converge at a reasonable rate and give it a normal look for an Elliott wave triangle, the BD trend line would be most likely to have a reasonable slope, as I've drawn it here. And so what that means is cycle B is most likely going to be a regular contracting triangle and not a regular barrier triangle. If it were a barrier triangle, then D would end about the same level as B. The BD trend line would be essentially flat, and that would mean the triangle trend lines would barely converge, and it wouldn't really have a normal look. And so I'm expecting primary D to most likely be a 0.618 depth of primary wave C, because one of the triangle subwaves does tend toward that length, and that's how I've calculated a target at 1216. Let's take a look now at the daily chart level, where we're looking at this possible zigzag down for primary D, where the end of primary C is this point here. So we may have a 5, 3, 5 zigzag unfolding lower. Intermediate wave C may have begun here and may be unfolding as an impulse, with an impulse for minor 1, a relatively shallow double zigzag structure here for minor 2, and an impulse down for minor 3 beginning, We may have an end within -3 of minute wave 1 at Thursday's low, and a few days of a shallow, choppy sideways movement for minute wave 2 for a little consolidation, and then this wave count would be expecting a third wave down at 2 degrees to break below support and move quite a lot lower. I've widened the target here to a small zone, now calculated at 2 degrees. We have primary D will equal 0.618 times the length of primary C at 1216. And then intermediate C will equal 2.618 times the length of intermediate wave A at 1211, so now a $5 target zone calculated at 2 degrees. I'm leaving the invalidation point up here because if -2 is over here, then it would have been reasonably shallow. We have to allow for the possibility it could continue further. We could move the degree of labelling here down 1. This could be wave A, we could have B, and then C of an expanded flat correction. Minor wave 2 could continue further. It may not move beyond the start of 1 above 1364.36. Let's take a look now at the hourly chart where the high of -2 is this point here. From this high to this low, I can see a 5-wave impulse. This may be minute wave 1 within -3, and I'll be looking for some sideways movement for minute wave 2. It looks like it may be unfolding as a zigzag. That structure certainly could change. It could turn out to be a double zigzag, a flat, or a combination. The only structure it can't be is a triangle, because second waves may not subdivide with triangles as their sole corrective structure. I'm looking for the 0.382 Fibonacci ratio as the most likely place for minute wave 2 to end. Because of the downward pull of a third wave at 2 degrees, minute wave 3 of -3 may be strong enough to force the second wave correction to be more shallow than it may otherwise be. And so this is a more likely target, I expect, but it could still move higher, it could be deeper and end closer to the 0.618 Fibonacci ratio. That's also a target, but less likely. If it got that high enough, it should find resistance at the upper edge of the base channel, which I've copied over from the daily chart. At the weekly chart level, this is the next wave count, another possible structure for cycle B, and up to a couple of days ago this was the main wave count for gold, but now we're starting to see some movement down here and a lot of bearishness. There's some more doubt. There is more doubt now on this wave count. If we have cycle B as a zigzag, then it would subdivide 5, 3, 5. The problem here is that primary wave A looks like a 3-wave structure, and here this wave count tries to see it as a 5. That has to reduce the probability. From here, primary wave C may be an ending expanding diagonal. Within an ending diagonal, all of the subwaves must be zigzags, and the fourth wave must overlap first wave price territory. So we have a zigzag for 1 and 2, and 3 is longer than 1, and 4 is longer than 2, and so 5 needs to be longer than 3 for this wave count in order to meet the rule regarding wavelengths for an expanding diagonal. 5 must be a zigzag subdividing 5, 3, 5. B may not move beyond the start of A, below 1236.54, but prior to final invalidation, this wave count will be discarded if we see a full daily candlestick below the 2-4 trend line and not touching it. That's because diagonals, like triangles, should adhere very neatly to their trend lines. Occasionally there are small overshoots. There's an overshoot here and a couple here. When we look back at these overshoots on the daily chart, there is not one full daily candlestick outside and not touching these trend lines. Each day, price had part of the day inside the trend lines. And so I will expect for this possible overshoot to see that again. Let's have a look at this at the daily chart level, where minor A is this high up here. So we may have the first zigzag, X, second zigzag could be complete down here. We've got an overshoot for Thursday's candlestick. There is no proper breach, but if we see a full daily candlestick print below this trend line and not touching it, I will discard this wave count, because then the diagonal trend lines would be breached. Now that can happen very occasionally, but it's so rare with the other problems now with this wave count, and now a lack of support from classic technical analysis. If that happens, I will discard this wave count based upon a very, very low probability. This wave count expects a major low in place and a new wave up for minus C to move intermediate wave 5 above its minimum requirement, above 1398.41. Let's take a look at classic analysis, how it ended the week. This weekly candlestick moved price lower with a lower low and a lower high, but it doesn't have support from volume. So this week the market mostly fell of its own weight. There's a little bit of a lower wick, but there's also quite a bit of an upper wick. So there's not enough of a long lower wick here for me to say that this is bullish. We could certainly see another downward week following it. There was previously strong support, about 1300 to 1310, that was broken through really strongly last week, and now we'll expect that area to offer resistance. This is really important this week from on-balance volume. At the weekly chart level, we now have a very clear bearish signal from on-balance volume. This trend line is reasonably long held. It has a slope, but the slope isn't too steep, and it's tested at least 3 and possibly, if we count this, 4 times, and so it has fairly good technical significance. There are 3 aspects to trend lines that indicate their technical significance: how long the line is held, how many times it's tested, and how much of a slope. The longer a line is held, the more significance it has. The more often it's tested, the more significance it has, and the shallower a slope, the more significance it has. Horizontal lines have the most significance, and so this trend line has a pretty strong technical significance. That means a break of it is a pretty strong bearish signal, and this is one reason why I'm swapping over the wave counts and I'm now more bearish for gold, at least for the short term anyway. ADX at the weekly chart level now tells us that there is a downward trend. It's rising up from below 15. The negative DX line is above the positive. ATR is still quite low and flat, and that also offers a bit of support to the idea of a triangle. We should see MACD hovering about 0 toward the end of the triangle. That's pretty common, and declining and low ATR as price comes to an end within the triangle. So this supports the idea of a triangle. RSI is neutral. There is plenty of room for price to rise or fall. Stochastics at the weekly chart level is oversold. It can remain oversold for a few weeks, only when it's been oversold, and then exhibits some bullish divergence with price will I expect that this downward swing could be over. Now, in the last couple of weeks, I took some time to look back at these 2 breakouts here to the downside, and had a look at what was happening in here. And after we had the false downward breakout, could we apply the lessons learned there to what was happening here? My conclusion up until here really was that this downward breakout below this consolidation zone could have been false, because it looked quite similar to these 2 false downward breakouts. But now this week, with another good couple of downward weeks, it's starting to look like this may not be a false breakout. This may now be true. We can only go by what's happened before without being able to actually see into the future. We have some bullish long lower wicks, particularly on Thursday's candlestick, and so I'd expect a little bounce at least after that to resolve that bullishness. Upward movement for Friday with a higher high and a higher low, though, does not have support from volume, and so the upside looks a bit limited. Bulls at this stage, at this point, look quite weak, so I'm expecting a little pause within an ongoing downward trend. ADX at both the daily and weekly chart levels tells us that price is in a downward trend. On-balance volume at the daily chart level also is bearish, as well as at the weekly chart level, so that's all quite bearish. RSI is still neutral. It's not oversold yet. When it reaches into oversold and then exhibits some divergence with price, then I would look for a bigger consolidation to resolve that bearishness. That's not the case yet. There is still further room for price to fall. And ATR is strongly declining. This trend is still reasonably weak. Stochastics is oversold, but it only exhibits small single bullish divergence with price. Only when it's been oversold for a while and exhibits reasonable bullish divergence with price like this situation back here, would I then expect that we probably have an end to this downward movement. Bollinger Bands contract as price were rising and now expand quite strongly as price is falling. Bollinger Bands will often expand with the trend and contract when price is moving against the trend, and so that's bearish, and MACD is full ball bearish. The picture at the end of this week for gold looks quite bearish indeed. price will not move in straight lines. There will be consolidations and bounces along the way down, and I expect we're going to see at least a short-term little bounce early next week before the continuation of downward movement. That's all from me with your gold analysis this week, and I hope all our members are having an awesome weekend.